Hello, welcome to Strictly Money at the News Forum, where all voices matter. I'm your host, Sejal Patel. The COVID-19 pandemic has certainly shone a light on the increasing gap between the haves and the have-nots. It's also highlighted the importance of charities in our country. However, charitable organizations have also struggled to raise funds for important causes despite an increased need for their services. The latest report from Canada Helps revealed that while Canadians donated 7% more this year compared to last year, donations are far below pre-pandemic levels, even though 42% of charities are not able to meet the current level of demands. Jacob O'Connor is the Senior Vice President of Engagement at Canada Helps, and he joins me now to discuss the impact the pandemic has had on charitable giving and the work his organization is doing to support those in need. Jacob, it's great to have you on.
Thanks so much for having me, Sejal. Happy to be here.
So before we get into the stats and trends, tell us about Canada Helps, what it is and its mission.
Sure, yeah. So Canada Helps is first and foremost a registered charitable foundation, and we are a technology organization that looks to increase giving in Canada through technology. So we offer a one-stop shop where Canadians can go to at canadahelps.org and search for, donate to, or fundraise on behalf of any charity in Canada and instantly get a tax receipt. We also build easy-to-use and effective online fundraising technology for charities as well.
Okay. So I mentioned a few statistics, Jacob, earlier. What are some of the big shifts that you've seen because of the pandemic? And maybe we can talk about first the amount of charitable giving.
Yeah. This is a great question. And I think before diving into the giving aspect, just to paint a picture. So at the beginning of the pandemic, back in March 2020, what we saw is that overnight charities had to drop all of their traditional methods of fundraising. Right. So all in-person fundraising events, for our local theaters, they were not able to have any shows, ticket sales. So there was a big chunk of revenue that was lost overnight, and charities had to pivot. In 2020, what we saw in the first year of the pandemic was a 10% decrease in overall donations because of these lost revenue streams. At the same time, what we've seen, and this was a really big bright spot, was a huge lift in online giving. So over 100% increase in online giving last year in 2020. What we're seeing this year is as Canadians, we've been able to keep that level up. And so we've actually seen year to date thus far a 7% increase over last year's online giving levels. But I just have to say that we're heading into these last few weeks of the year, and from Giving Tuesday, which fell at the end of November this year, up until December 31st is where we see about 30% of giving take place.
All right. In terms of the type of funds that got the donation over a pandemic, where did you see that? I have to assume because of job losses, rise in inflation is a big theme this year. Is it food banks? Is it healthcare?
Yeah, that's great guesses. So what we've seen overwhelmingly, and we see this time and time again with Canadians, very generous country, very generous people, and we respond. And so throughout the pandemic, we've seen huge increases in donations made to social services organizations like food banks, like homeless shelters, and also those health organizations that you mentioned, all of our hospital foundations and folks dealing on the front lines of the pandemic. But we have also seen increases in donations to, actually the largest increase that we saw in 2020 was to Indigenous serving organizations. And this was also a response to the social justice movements that began in 2020 and have continued to move on into 2021.
What charitable donations or organizations then took a backseat where we didn't see funding?
Yeah, I think that when there is a crisis at home, I think that becomes an immediate need and an immediate there becomes an urgency there for Canadians, and so we didn't see as big of a growth when we look at organizations that work internationally, and also organizations in the environmental field didn't see quite that same amount of growth that we saw with those organizations that are serving our most vulnerable during this difficult time.
Yeah, and typically arts gets a lot.
Yes.
I have to
yes.
think
So that was
a
yes. So that And I mentioned there too, many of our arts organizations have been unable, and throughout the pandemic, even to date, have been unable to generate any revenue.
Welcome back. I'm here with Jacob O'Connor from Canada Helps. Jacob, what I thought was interesting when I was reading some of your reports was that those over 55 doubled their charitable giving. And my understanding is that there's still some stickiness. So they typically donate to the same charity because they're used to it. But it's actually very different for younger generations. Can you share some insights into that?
Yeah. And so I'll just firstly clarify that. So what we see, the phenomenon with the 55 plus generation of donors is that they are actually giving at twice the rate of those aged 25 to 54.
Wow.
So there's a huge gap, which we've dubbed the giving gap, when it comes to donations from that younger generation. So the older generation is taking on more and more the bulk of the giving and the support of charitable organizations in Canada. One thing that we did see this year in our recent poll was that during the pandemic, when we look at the different generations, we see that younger folks actually increase their giving the most during the pandemic. So people aged 18 to 34 actually increased their giving by 17%, versus that 55 years and older age group only increasing their giving by 12% in comparison. Other thing that we've noticed about this younger generation of donors, you mentioned that the older generation might have a lifelong affinity to one or certain organizations, where the younger generation has an affinity to certain causes. So they want to donate in support of the environment or social justice movements.
Okay. One concern that I want to address, I guess, because I hear this often, is a lot of people who donate want to make sure that their money is going where it's intended, and it's not eaten up by fat overhead. Mm-hmm. What's your response to that?
I think that's a very valid concern. I think whenever we're making any type of investment with our money, we want to make sure that it's of use, it's of value. What I would say to that is that when you're donating to charities in Canada, every single charity is registered with and vetted by the Canada Revenue Agency. Mm-hmm. As part of that registration, every single charity needs to have quite a high level of accountability. So for every registered charity in Canada, they must make their tax filings public to Canadians every single year. So you actually get to see where every single one of your dollars go. But I'd also like to make a second point here, is that this is often the single way that we evaluate the effectiveness of charities. And I think this could actually hamper the effectiveness of charities, because this type of paradigm doesn't allow them to invest in themselves, and could mean in less wages for their employees, right, which leads to burnout and difficulties there. So at Canada Helps here, we like to focus on the impact that the organization is making rather than simply their overhead.
Yeah, and I think that's a very important point, Jacob, because it takes people and investment to run a charity, and sometimes we do forget that. So they can find this information on the CRA website or your website. Is that correct?
Yeah, so all of this is available on the CRA's website. On CanadaHelps.org, you can also search for and find any charity in Canada, and that financial information from the Canada Revenue Agency is pulled into our website. That's there. Additionally, on every single charity's page, there is an impact page where the charity, yes, you're able to see that financial information, but they're able also to tell that impact story. So it's all there in one place.
Okay. I want to get your thoughts on Gofundme, because they're very popular, and I can see why. In one sense, they see exactly who they're impacting. There's a story often behind there, but there isn't often scrutiny. It's not a registered charity. What do people have to be aware of?
Yeah, I'd firstly like to say that, so when these crowdfunding platforms allow for individuals or groups to create to write a story and create a fundraising page for something that's important to them. We've seen tremendous acts of kindness and amazing things made possible through these crowdfunding pages, like the funding of really important healthcare to people that wouldn't have had the funds otherwise. I think you touched a really important point. A couple of things to note is that these pages are tied to individual bank accounts, and there aren't those same accountability mechanisms in place that we talk about with registered charities.
Right.
So again, when you give to registered charity, firstly, if you're going to CanadaHelps.org, every single charity's page is linked directly with their bank account, number one, so you know where that money is going. And number two, these are vetted by the Canada Revenue Agency. They have there's laws in place about how they can spend their money.
Okay. Jacob, thanks very much for coming on the show today. We really appreciate it.
Thank you so much for having me.
And we have your website up so people know where to find you. That was Jacob O'Connor of Canada Helps. Welcome back to Strictly Money. Well, the holiday season is often synonymous with splurging on gifts and food, maybe even travel. But if you take a bit of time out to plan your finances before we say goodbye to 2021, there are some strategies that can help you save money. Joining me now with his tax and year-end financial tips is Brian Quinlan. He's a partner with Campbell Lawless Chartered Professional Accountants. Hi, Brian. Great to have you on.
Great to be here. Great. Thanks for having me.
So let's just start off and kick things off, because there's a laundry list of things that people should at least think about as we close out the year. Let's start off with investors. What are some of the things that they can do to think about minimizing taxes?
They're probably the biggest one that have some things to do at year end. Again, the big comment now in late November and December, as we're in now, is tax loss selling.
Yeah.
Which means if you do have some securities that you've kind of given up on, and you've got, it might make sense to sell those now so they clear the stock exchange before the end of 2021 and not into 2022. So the capital loss you will have to offset other capital gains you've incurred in the year already. So better to sell now than say the first week of January, because that loss can be used. So that would be the main thing for investors is if something you don't like, sell it now as opposed to in January.
Sell it now. And there's a rule, right? You can't buy the same asset back for at least 30 days.
That's right. If you do sell something at a loss, but you do like that stock, let's say, you have to wait at least 30 days to buy it back, or the loss really is nullified. So if you kind of do like something, but you want to trigger the loss, you can do it. You do it now, but wait 30 days to buy it back if you think it's going to go back up, kind of thing. So you're right. So you got to wait 30 days before you buy the same security back, or the loss will be denied.
Okay. What about TFSAs? So the contribution deadline for this year is obviously December 31st.
Yes. Okay.
Brian, does it really matter, especially when contributions are after tax and you can carry forward the room anyway?
Right. There really is no TFSA deadline per se.
Yeah.
So you don't have to hurry out. I'm more focused on people in early January making their 2022 contribution. We all earn another $6,000 of contribution room. So that would be something to focus in on. January is bumping up your TFSA by $6,000 kind of thing. But there's certainly no hurry to go out and contribute. And also I caution that people sometimes will contribute at the end of the year, but they've taken some money out already. So they could be over contributing if you take out and put it in the same year. So be very, very careful. And if unsure, just wait to January to kind of catch up from old contribution rooms and to make your new ones. That's probably the safest bet. Again, there's no hurry. As you note, it's not part of your tax return. There's no tax deduction for it. So whether you do it now or in the first week of January, doesn't really matter.
Okay, that's a good point. What about parents who invest in RESPs, or Registered Education Savings Plans? Now, if they want the grant, am I correct that they have to contribute by December 31st?
Again, the grant, that's not a super hard deadline. The grant is always there with a 1-year carry forward as well. So there's no super hurry to go and make that. Obviously, make it now, get the money growing tax deferred as soon as possible. So it would make sense to do it now, but not a really super hurry to do that before the end of the year.
Okay. We had Jacob O'Connor on just earlier from Canada Helps talking about charitable donations. And obviously, if you donate to a registered charity, there's a tax credit. Can you explain how that works?
Definitely. That's something you do want to make before year end. If you have charity donations to make, again, better to make them now in December than in January to get the tax credit this year. Depending on overall, once you've contributed over $200, the tax break you get from a charity donation is quite good, almost 50%. So there is quite a tax write-off for that. So many people may say, well, I don't have any money right now with the holidays coming and Christmas shopping and maybe some, I don't know if they're traveling with COVID or not, but you certainly can put it on your credit card. Now, I'm not saying go in debt to make a charitable donation, but if you put the money on your credit card now, it's recorded in December, and maybe pay your credit card bill off right in January, then you still get the credit for 2021. That's what I would suggest you do. And
Right.
again, also, sorry, I was going to say, if anyway you're cash poor, the best bet is if you have some securities to give the securities to the charity. Sorry, that's right. So give the securities away, public company shares. You can give those away in kind. The capital gain becomes tax-free, but you still have a tax donation for whatever the market value was of those securities at the time. So definitely, if you have securities, I look at those first versus definitely don't want to sell them and then distribute the money to the charity. Just give the charity the securities themselves.
Yeah, sure. Brian, it was so interesting because the trend is donation of securities is up 52%. So very interesting.
Great.
We're going to take a quick break and we'll continue this conversation when we come back.
Great. Thank you.
Welcome back to Strictly Money. Brian, I want to switch gears and talk about tax strategies for business owners. What are some of the things that they should be thinking about during this time of year?
It may depend on the year end of the various business, but if year end is December, whether you're incorporated or not, if you plan to buy anything, definitely do it now. Before the end of the year, because then you would get the tax deduction for it this year versus next year kind of thing. There's rules that in their last budget they expanded how quickly you can write off equipment used in your business. So if you want to purchase something, better to purchase it now than later kind of thing and get a big write-off under revised tax rules that came in this year, I think. So again, if you're going to spend some money, do it before the end of the year is what I would say first.
Okay. With COVID, a lot more people were working from home. Can you just remind us what kind of tax relief they can take advantage of?
Okay. Last year, obviously, was the first personal tax year. You did your 2020 personal tax return, and many people were able to deduct at least maybe $400 of home office expenses. That's the big win, if you want to call it that, from a COVID for an individual employee that's forced to work at home. And many of us are still working at home now. So we were able to take a bit of a deduction for home office expenses. I don't know if CRA will expand that as we go into personal tax season over the next couple of months, but definitely as people have incurred expenses, one for the full year versus maybe 9 months last year, is tracking whether you can write off a percentage of your rent, a percentage of your utilities. Did you have to buy a computer to do your job at home? What did your employer reimburse? Where's not, kind of thing. So hopefully we'll get some more leadership from that. We have a budget coming in March if they're going to change the rules on that kind of thing. But definitely you want to make sure when you do your personal tax return in a few months that you do take advantage of what you can deduct from working at home due to COVID.
Okay. The Liberals, they just released their fiscal update. Is there anything that stood out for you that that business owners or just Canadians need to be aware of?
Okay. The biggest thing was what wasn't there. I think the whole tax community was afraid that the capital gains inclusion rate would be increased. Right now, we pay 50% of a capital gain is subject to tax. Right. And in past years, in the 90s, they've increased that to 66 2/3 and up to 75%. So the tax people are worried. We got to pay for all these COVID. COVID's been very, very expensive to the government. And part of the fiscal update was Liberals are going to spend more and more money on COVID kind of thing. So the good news is capital gains are still at 50%, but we do have a budget, federal budget coming in March, which could be more meat into it in terms of tax changes coming up. So I'd be aware the March budget.
Okay. So Brian, we talked about year end, a checklist that people need to think about. Of course, with tax planning, it never ends. You should always be thinking about it. Yes. What should people look at going into the new year and maybe for the first couple of months?
I think that's a great question. I think I always use the word life cycle tax planning. When you're a student, you've got your tuition credits. You may get married and there's credits there for a spouse in a lower tax bracket. Children come along, so we have childcare. It's big things that happen in your life. How does that impact your tax position kind of thing. So you're always thinking along the lines, and what can you do with you and your family to minimize the overall tax burden? I always say, don't be a selfish tax planner, bring your family into it. And there's many rules in the Income Tax Act that are incentives to do certain things. It's not, these are tried, tested, and true tax planning things that are in the Act. Just making sure you're taking advantage of them as you go through different stages of life.
So what about RSPs? Because
RSP?
yeah, that's a big one that a lot of people pay attention to for the first couple of
A
months.
very big one, and that's one deadline. It's not in 2 weeks, not at the end of December. We have until March 1st, 2022 to make your 2021 contribution. So I believe in RRSP. So you don't have to hustle out the next 2 weeks to make your 2021 contribution. You have until March 1st to make it as well. So that often is one of Canada's best tax shelters. If you're an employee, there's very, very little you can write off. So make the RSP contribution to save you and your family some taxes. No question.
Yeah. And don't wait until end of March, right? Because you want to take advantage of that power of compounding.
Exactly. If you have the money now, do it now. Do it in the next 2 weeks kind of thing. Get the money in the RSP and start growing tax deferred or compounding tax deferred as you want. And into January, February, you can start making your 2022 contribution. No need to wait until the end of the year to make the contribution for the coming year.
Brian, thanks so much for your insights today and your tips.
Great.
We appreciate
Anytime.
you coming on. Brian Quinlan, partner with Campbell Lawless Chartered Professional Accountants. Well, that wraps up this edition of Strictly Money. If you have questions or feedback, drop me a line. Wishing you and your family a very healthy and happy holiday season. Thanks for watching.